How's it going, guys? Limelight Capital here, back for another video. So it's going to be another GameStop Reddit post. I'm just going to continue this series, guys. I haven't had as much free time lately. So, and also been getting, my equipment in order. My fiance did get me this beautiful blue brand microphone here to Yeti. This thing is a beast. It's for my birthday, which was on August 2nd of this year. It was like a week and a half ago. But yeah, guys, that is irrelevant. The topic today is an awesome Reddit post that I saw recently, which is by the user Return of Capital. The title is 3 Major Reasons Why I'm All In on GameStop. I did think this. I sent this to some friends. That I'm keeping up on the GameStop situation. I did think this was a really cool. It's a good summary of just what is going on with this situation. It does get a little difficult, trying to explain to, people that aren't really in tune with the stock market or the situation. This is a really good, summary. Even maybe if you do have friends that are into the market and aren't aware of the situation, this post just sums it up really well. And, in my opinion, I think it's one of the best summaries that I've ever seen. Short, concise, to the point. I will go through it and then, just add my own little touch to it and my thoughts on it. But yeah, guys, just a reminder, please leave a like on the video just to get exposure for the channel and for this kind of content. The GameStop situation has become obviously more than about money. At least I can only speak on myself. In the beginning, this was purely a money play. Back in January, I was just trying to make a couple bucks, to be honest, but it's evolved into, something more. It's evolved more into a movement. A lot of things have come out. The corruption that we face, and the United States stock market is essentially a corrupt machine, with the top elite basically reaping the benefits. They don't want to take the losses and they want to reap the profits. That's just as simple as I'll put it. But yeah, guys, so let's jump in. Again, this is by user Return of Capital. Shout out to him. There's his little icon thingy here if you want to look at any more of his posts. Yeah, the title is 3 Major Reasons Why I'm All In on GameStop. Let's jump right in. So, 3 major reasons why I'm all in on GameStop. I study complex systems. I've been told that I am very good at connecting the dots and seeing the significance in seemingly random relationships. I present a brief aggregate of my research and opinion, not financial advice. Please do your own due diligence and fact-checking before initiating any trade. Disclosure, I have a significant long position in GameStop. Part 1, Short Squeeze Potential. There is a possibility that the majority of GameStop short positions were not closed during the January Gamma Squeeze. A combination of strategies by institutions were coordinated, such as shutting down the buy button to prevent retail buy pressure. Also, guys, I just wanted to add this real quick. I'm just stopping at this part right here. He does have links here, which are basically sources to pretty much everything that he's mentioned here. So, for example, I just clicked on this one here. Shutting down the buy button, which is what a lot of brokerages did here. So it does link to this article, Robinhood restricts trading in GameStop frenzy, So yeah, just wanted to let you guys know that if you want. And again, I will link this down in the description below. Anyway, mainstream media such as mainstream media manipulation campaign to make it appear like the squeeze is over, such as claiming Melvin Capital closed its positions after losing nearly 50% back in January, yet continued to have mark-to-market losses of nearly 50% to this day. Hint, maybe they didn't cover their shorts. Hiding short positions with option strategies and ETFs to avoid reporting short interest to FINRA to make it appear that the shorts have covered, even though the fines for not reporting short positions correctly are generally a slap on the wrist. These strategies successfully halted a short squeeze in January that would have possibly shot GameStop into the thousands of dollars per share. Note, Melvin Capital got a nearly $3 billion emergency bailout by Citadel on .72 back in late January. Recent theories suggest that Melvin's GameStop short positions were transferred to Citadel & Co., though this cannot be truly confirmed due to lack of transparency with regards to hedge funds. So, second bullet point in part 1, the squeeze was thought to have been over after GameStop plummeted down to $40 in February until it spiked to $340 twice over the next 4 months. It was speculated to be a result of fail-to-deliver cycles every 21 to 35 days, though it's hard to know for sure what the causes were. However, one thing is certain: if the shorts really covered back in January, this price action would not make sense, and the level of media attacks, censorship, and paid shills, etc. on GameStop would not be there. There are theories of naked short selling via rehypothecation and other methods which are discussed in some interviews. This could potentially result in more open short positions than the total outstanding shares. And a Robinhood lawsuit indicates the short interest was about 226% around January. Note the 226% short interest figure is also confirmed through FINRA in February. Although the present FINRA reported short interest is much lower today, it is still considered high by any traditional metric. We all know that there are ways to hide short interest, as discussed more in depth here, and that the real short interest could be much higher than reported. We can look at history to see the types of short squeezes that could happen to GameStop from here on out. A mother of all short squeeze, such as when Volkswagen short squeezed in 2008, making it the most valuable company at one time. A dividend-triggered short squeeze, such as Overstock announcing a blockchain dividend, which forces short sellers to close their positions. And it's also worth mentioning rocket companies experienced a short squeeze right after announcing a special dividend. A drawn-out short squeeze like Tesla did in 2020, which shot the price over 10 times its March 2020 lows, resulting in major losses to short sellers. Note that all these short squeezes occurred with much lower short interest than GameStop's currently reported short interest. These are examples of the possible types of short squeezes for GameStop based on historical precedent. There are multiple stocks with heavy correlation to GameStop, and movie stock is one of them. For anyone that doesn't know, that's AMC. On Reddit, on this subreddit, you're just not, it's a GME-centric subreddit, so we try to keep, AMC, specifically the ticker, out of it, because, people do scan for data on here, so we try to just keep it to GameStop and mention anything else with a code word. And the movie stock is one of them. Movie stock peaked around $20 during the January Gamma squeeze on multiple heavily shorted stocks. On June 2nd, 2021, movie stock spiked to an all-time high of $72, nearly 4 times its January peak, while exhibiting similar levels of reported short interest to GameStop. This was a technical confirmation for me that GameStop has the potential for similar magnitudes of price action. Part 2, hedge against a possible market crash. We've all heard by now that there is a potentially catastrophic market crash due. The question is when. This is impossible to answer since nobody can see the future and predict the exact date. Could be tomorrow or 10 years from now. However, there are current red flags raised, such as high P/E ratios, elevated Shiller-Cape ratio, Buffett indicator, and other fundamental technical indicators suggesting an overvalued equity market. Margin debt is at all-time highs, even rumors of hedge fund leverage being higher since 2008. Or higher than ever before. A possible commercial mortgage-backed securities bubble looming since 2008. Instability in the repo market and the spikes in overnight reverse repo levels. Indications of rising inflation as shown in the CPI data. Fears and uncertainty of the Fed raising interest rates and tapering its quantitative easing program, especially as world central banks start tapering amidst concerns of non-transitory inflation. Not to mention the world has yet to fully recover from the COVID-19 pandemic, and the possible lasting economic damages not yet realized as equity markets rallied to all-time highs during this time. A new COVID, Delta variant, and other possible future variants pose risk to economic and market stability as well, and these are just a few of the red flags that I have thought of. So let's see, I just lost my place, I'm sorry. Amongst many other unlisted signs or warnings by other experienced investors. So let's break this down. The Fed responds to COVID-19 by injecting the capital markets with liquidity via infinite quantitative easing and lowering interest rates to the near zero in an attempt to backstop the economy. Albeit averting a larger crisis, but also creating a possible moral hazard in the process. Some say the spectacular bull run of the past decade was partly fueled by the Fed via its QE program since 2008 and declining interest rates. With all that liquidity and cheap lending slash debt provided by the Fed, an unprecedented bull run followed after the March 2020 COVID crash, but it was a blip in the timeline. Knowing that the Fed will backstop the markets to prevent another market crash during an economic emergency, everyone levered up to enhance their returns, a moral hazard indeed. To take advantage of that, both long and short, hint hedge funds betting at GameStop going bankrupt due to the pandemic. Now that the economy is successfully reopening as more and more people were vaccinated, the Fed has less incentive to backstop the equity markets as aggressively as before, especially when inflation could cause the Fed to lose control and be forced to enact contractionary monetary policy. We all know what happens when the Fed pulls liquidity out of the system and raises interest rates during an over-leveraged asset bubble. Hint, Japan asset crash.com bubble. Sometimes singular entities can crash the system by being over-leveraged and taking extreme risks, such as long-term capital management having to be bailed out by the Fed to prevent a systemic collapse. I wonder if Citadel read the book When Genius Fails. So we see a lot of red flags in the overall market economy, and we know that the next crash could be of epic proportions, a deleveraging type of event that could lead to an extended bear market. What are the best ways to hedge against it? Well, it turns out that GameStop has a negative market beta, and depending on the sources used, it is anywhere from -2 to -27. This means that if the market were to crash, GameStop would theoretically rise by a factor of 2 to 27 compared to the S&P 500. The going theory for this phenomenon is that institutions and individuals betting against GameStop must have collateral margin requirements to hold short positions. Their collateral typically consists of going long on other stocks' assets, for example, big tech, and a precipitous drop in the value of these assets will lower their collateral and risk margins, and would risk margin calls, which would force them to sell, liquidate their long positions to cover their short positions. Massive long liquidations could trigger a snowball effect, especially with their current amount of leverage in the system. If the theory proves to be correct, we could see GameStop as one of the bright green candles emerging from a sea of red in the overall market during a crash. This would also present a perfect opportunity to sell some of your GameStop holdings and buy the dip on all your other favorite stocks at such a huge discount. Note, with the introduction of the new NSCC-2021-010 rule, this may decrease the magnitude of a market-wide crash via long liquidations to cover GameStop short positions. Part 3, improving fundamentals and business transformation. GameStop has paid off its long-term debt and currently has little to no debt. A new and refreshed board of directors and senior management containing talent from Chewy and Amazon, such as the new CEO and new CFO, as well as newly elected chairman Ryan Cohen, founder of Chewy. There also are many new hires from Amazon, Chewy, etc. They also raised nearly $1.6 billion in cash from 2 equity offerings in April and June. They intend to expand by opening 2 new fulfillment centers covering both the eastern and western parts of the U.S. They're already making a comeback from the failings of its previous board and management, beating the Q1 earning expectations and 25% sales revenue improvement compared to the previous year's quarter. Entering the blockchain and NFT space, which is an area with huge innovative potential that could spawn a marketplace of reused games trading, exclusive game content, and revenue sharing, deals with developers, metaverse, and more, maybe blockchain dividends as well. Formation of a strong global brand name after the Gamma Squeeze in January. News of GameStop was broadcasted throughout the entire world, and a large, passionate community supporting the business and likes the stock. Keep in mind, GameStop already had 47.1 million Power Up loyalty members in the U.S. alone since January 2021. Ryan Cohen successfully built Chewy into a $50 billion market cap powerhouse at the peak price of $120. GameStop would be worth $650 a share around the same market cap. Note that Ryan Cohen has more experience than when he was back when he first started at Chewy. Sorry, that was worded really weird. And has access to more assets, human and financial capital. Note to mention the new Amazon executives and team members that will help him fast-track GameStop's e-commerce development. Additionally, the total addressable market for pet food is projected to be about $113 billion by 2025, while the total addressable market for GameStop is set to nearly triple that by 2025 at about $300 billion. It is difficult to accurately price GameStop with traditional value metrics, DCF, PE, ratio analysis, etc., as they are just beginning their turnaround. After all, traditional valuation metrics never saw Tesla becoming what it is today, and fundamentalists are scratching their heads to this day. Let's take the current market cap of a few companies from the retail e-commerce sector. Chewy, founded by Ryan Cohen. Tesla, since it has a similar meme potential and ignores fundamentals. Apple, largest company in the world by market cap, and adjust it to GameStop's price per share just for fun. So there's a chart here, and it has GameStop market cap 12 billion, share price 161, or GameStop's share price equivalent 161. Best Buy 28 billion, so the equivalent of GameStop share price would be 376. Chewy 37 billion, equivalent would be 497. Target 123 billion, equivalent would be 1,748. Walmart 393 billion, equivalent would be 5,485. Tesla 633 billion market cap, equivalent would be 9,505. Amazon 1.88 trillion, equivalent would be 22,748. Apple would be is 2.42 trillion market cap, and the equivalent would be $32,500. So yeah, that chart does show that based on market cap alone, GameStop should be worth a lot more. Conclusions: I believe GameStop has a significant upside potential due to a possible short squeeze, or even a mother of all short squeezes, or the MOAS. This can be triggered in multiple ways, such as a blockchain dividend, spike in buying pressure from positive catalysts, FTD cycles, market crash, regulatory enforcement, etc., or simply fundamentals driven. I believe GameStop is a better stock to own in a market crash compared to any other stock I could find, due to its extreme negative beta, indicating a large possible strong hedge. It's almost like a levered short on the overvalued, over-leveraged, fragile market without paying borrowing fees or put option premiums on the SPY. I believe GameStop is a good long-term value play due to complete overhaul of the board and management, a healthy balance sheet, and innovation initiatives. If GameStop reaches Chewy's market cap under Ryan Cohn's leadership, it would be worth about $500 per share. If GameStop can capture even 5% of Amazon's market share, it would be worth over $1,200 per share. Therefore, at its current price, it's a solid investment. Worst case scenario, you beat the S&P 500 over a couple of years. So yeah, guys, this is just a great post, well written. The information, it's sourced throughout the entire thing. I really give props to whoever wrote this. It sums up my thoughts on GameStop perfectly, and I'm sending this to friends and family to try to get them on board and explain why this is potentially the trade of a lifetime, and it's a once in a lifetime trade. Guys, even just looking at this chart here, I really like this idea that he did, comparing the market cap of GameStop versus, say, like things like Apple. So, the market cap of Apple, if you compare that to the equivalent of what GameStop shares should be worth, it would be $32,000, so that's very telling, you know what I mean? Right now the stock's trading at about $150 a share, so it's a great time to get in, guys. I am going to continue buying and holding. I've been holding since January. I've been buying slowly but surely. Just a reminder, guys, please, if you like this content, leave your thoughts in the comments below. Leave a like on the video. Definitely subscribe if you're not already. I'll keep pumping these videos out for you guys. It's been a little dry over the summer. Financial interest is, not the priority usually. It's usually vacation. But, we're getting back into the swing of things, and we're seeing a bit more action now. So, I try to only bring, quality DD to this channel. There hasn't been much, on Reddit. There's just been a lot of meme posts and forum sliding, and if anyone's familiar with the GameStop Reddit GameStop subreddits, you'll understand what I'm saying. But anytime I come across a gem like this, I try to bring it to the channel for you guys. Again, I do this to help people. This is not monetized. I prefer listening to things, learning it like that. So I try to bring that to you guys as well. Anyway, guys, please leave a like I said on the video. Leave a like, leave a subscribe, leave your comments, thoughts in the comments below. And yeah, I'll catch you in the next one, guys. Enjoy the rest of your day. Thanks.